Here's a follow-up video for the European yen trade that I'm in. I wanted to point out a couple of different ways that I read the market. These moving averages are very much like moving support and resistance levels for me, and you can see this on the hourly chart. It just threw a spinning top right there, and price came down. Stochastics was at the top of its range, and it had a pretty good run up for the day, probably exceeded its daily range. Over here, stochastics came down all the way to the bottom of its range, and when you have stochastics at the bottom of its range on a lower time frame, top of its range on the higher time frame, both of those pressures are really going to get you just a nothing here. It would have been decent for a counter trend scalp if that was somebody wanted to get in there really quickly. One thing I wanted to point out is, and this is why I look at multiple time frames simultaneously, if I look at the stochastics over here, it's not this smooth up and down trending band on the 4-hour chart. It started off kind of choppy, came back up, went back down, and now it's like it's not really given these clear bands that you can get a good sense of direction. And that leads me to believe that price action is not going to be indicated by this stochastic oscillator. When you have stochastics coming out of a really low dip here on the daily chart with a Morningstar turnaround and positive MACD divergence, you have newer market flow change with price action. And so that's what I was getting at in my previous video, and I think that it's kind of showing it's the way. What I would like to see is this kind of oscillate in a range, maybe make some new lows, and let price action really kind of wind out here on the hourly chart, and let the 15-minute catch all the way back up to the top and then come back down, so both the hourly and the 15 are topped out. And then what I think we could see here is, because it's so uncertain on the 4-hour chart, I think we could see a real good run in the high end of its range. These are used to measure like average buying and selling over a certain time frame, and don't quote me on that. It's just like a layman's reasoning for it. But if you look over here, it got all the way down to the bottom of its range, and this at the bottom of its range was way up here. And then it just, and you can see that there wasn't a lot of certainty in it. It was kind of banding together, and price just went on a huge run at the end of its range. And I think that's because when it's in the top of its range, people are looking for that downward pressure. When things are in the bottom of the range, people are looking to buy if the market's turning around. So you don't have those contracts just sitting there waiting to get executed in the market, and then the selling pressure can really put a good downward pressure on it. Over here on the hourly chart, I think that we could really see price action is closing above the 5 and the 8. It's engaging the 20. If it gets that 3-band cross coming upwards, I think that we could really see a good few hundred pips come up here. And so in the meantime, what I would like to see is price come back and then pretend like it's going to go back down and then just let loose, and we could see a lot of upward buying pressure. But I just wanted to show how when you have stochastics on the different ends of the ranges, you might get a really just compressed. This might shoot back up and test this. It might jump back down here. But like I said before, I want to see the stochastics come up and then come all the way back down. I'd like to see these come all the way back down, and then I would like to see the 4-hour come up, and then maybe throw some bands, maybe not be very decisive in a turnaround candlestick formation, and then just watch the market come up a bit. So I just wanted to follow up with that trade, and we'll keep you updated as it goes. Have fun.